Welcome to Kepa Life. Coming up this month, I'll give you an update on Kepa and the updates we have in the marketplace. We'll also get the opportunity of hearing from the team from Fidelity Life. Last month we ran a promotion for watch some of the segments on the video, answer the questions, and you'll go into the draw for some Prezi cards. Congratulations to Alana Collison and Sharon Giblett. The Kepa update. Fantastic news. On the 1st of August, Kepa launches our general insurance offer. We have employed a general insurance broker who will be domiciled in our office, and we're offering to all of our members the opportunity to refer your domestic, fire and general clients to us and or your commercial clients. Our team of brokers in the office will transact the business for you and obviously pay you the commission that's due to you. We're really excited about this initiative, and I think it's going to have a lot of appeal and traction in the marketplace. Licensing for Kepa and Kepa members. Kepa has registered the name Fit for License. We guarantee that Kepa will be fit for license when the regime kicks into place early next year. We'll also guarantee that any member of Kepa who wants to look at licensing will be fit for license. We have been building our licensed entity now for just on 12 months. We're working in conjunction with FMA, we're working in conjunction also with Strategy. We've had Barry Reid, who was with IDS, working with us prior to him joining Strategy. We've built everything in the licensed environment modular so that advisors, if they want to apply for their own license, can do so, and they can plug into us for the services and support that they're looking for to be able to attain a license and comply with a license. We're very excited about the future of what's happening in licensing. There's a lot of rumours going on about what's happening, when's it happening, what's going on. But it will happen. Licensing is coming to New Zealand, and there are going to be some fantastic opportunities for all of those that embrace it and really work with that environment. We will be fit for license, so watch out for this space. Upcoming events at Kepa. On the 21st of June, we have our Business Support Day. This is a day specifically targeted to be working with all of the PAs and administrative assistants in all of our advisors' offices. Invitations are going out. We'd love you to attend that day. We also have coming up a workshop from Generate on KiwiSaver. Welcome to the team at Fidelity. Today we have with us, Adrian, Philip and Tricia. So welcome guys, it's lovely to have you with us.
Thank you.
Adrian, you guys have been really busy over the last few months. You've almost completed your upgraded roadshows. How's it been received by the advisors so far?
Well, thanks for having us, Jeff. I mean, considering we haven't been in the market for some time, the response has really been quite humbling. The turnout from advisors has been astonishing. We've had over 900 advisors registered for the shows. The feedback has been outstanding. And what we're doing now is we're following up with the advisors that have attended through our BDM networks. And we're also following it up with a survey to those advisors just to make sure we've captured all of their feedback so that we can continue to evolve both the roadshow itself and the products and things that sit behind it.
Yes, I know. I attended the Auckland session. It was absolutely fantastic. A good buzz in the crowd and a lot of people there that I'd seen for some time. So it was good to see you guys back into the marketplace. So why have you made the changes that you've made?
Well, a key part of the changes have come back from advisor feedback. So we went through a process towards the end of last year where we ran focus groups with advisors throughout the country, and we got some fairly consistent feedback as to the sorts of things that we needed to look at. At the same time, we wanted to address clarity and consistency in terms of our policy wordings. So we bound those all up into a new package, with the idea being that we wanted to be back at the top of the market and also ensuring that we had the best possible outcomes for advisors and customers.
Okay. Well, that's absolutely awesome that you've been listening to your advisor network and taking that feedback on board, so fantastic. Philip, over to you. There's been a lot of upgrades. What do you think some of the most important ones have been?
I think you'd have to look at cancer and heart attack definitions as our number ones. Cancer, what we've done is we've basically rewritten that to now restructure it so it's what it's included versus what's excluded, and our treatment of melanoma and carcinoma in situ. Heart attack, we've basically rewritten that so that it reflects what a customer is likely to hear from a cardiologist. So if a cardiologist says you've had a heart attack, our definition will align with that. We've also made it very clear in our policy wordings around our income protection treatment, so it's clear around pre-disability income, our definition of disability. And also we've made some changes in our trauma multi just to make it clear that trauma multi will pay out multiple claims under the same definition but for different conditions. And there's been changes in the world of our special events. And for our life cover, it's probably been our introduction of a partial benefit for terminal illness. Those have been the big changes that we made.
That's absolutely awesome. You have listened to the advisors' feedback and made those changes. Because some of the things in those policy wordings were a bit grey and unclear, so that's great. So what do you think the benefits are? What are the major benefits for clients and for advisors?
There's probably three key words. It's probably clarity, consistency and outcomes. Clarity, we have literally rewritten our policy wordings. We had a lot of really good stuff in there. We've written them so it's very clear for both an advisor and a customer to understand what is going on. In the world of consistency, we've made it very consistent. So a definition that, say, might appear in trauma then flows through into specified medical and IP. And similarly, also the special events. They're consistent then across the life, the terminal illness, the TPD, so they're the same. And outcomes, as a result of all these changes, it's going to be great outcomes for customers and also for advisors.
When are the rating houses going to catch up with the good work that you've done?
Well, we have provided the rating houses with the policy wordings, and obviously it's in their best interest to try and reflect those policy wordings as fast as they can. They want to remain as relevant as they can. We've done a bit of an assessment, an internal assessment, to basically work out where we will have seen the changes, and we expect to see sort of a lift across the field. Trauma is probably the one that we've seen the biggest change in, but on aggregate I'd say we're probably ending up about second across the field.
Well, that's a pretty awesome position to be in anyway, isn't it?
Yes.
Yeah, so now that you've done this round, what next? What are the next round of product enhancements can we expect?
It's a constant challenge for product development and product management. It's something that we are consistently looking at. Probably what I'd say at this point is just watch this space. It's something that will be ongoing.
Tricia, professional development. I know what the market's going through, and especially with licensing coming up, compliance, education, and I know that we've invested very heavily back into our business and our members and making sure that everybody's going to be able to jump through the hoops. And I mean, you've joined Fidelity early this year, which was fantastic to see you do that. What's the main objective coming up for you in your space?
So Fidelity is committed to supporting advisors and their business models and helping them to refine, evolve and remain relevant to their clients in a changing environment. So a big key part, or two key parts of my role, are around one, helping advisors to build better businesses, and two, about supporting advisors in the new regulatory environment.
So what do you see as being some of the major challenges that advisors are going to be faced with?
Well, we're still awaiting the finalisation of the Code of Conduct and the disclosure requirements, and as we find out about those things, clarity will begin to take place, I suppose. And so as a key point right now, it's about saying, what can we do to identify and plan for personal and professional development gaps that exist in our businesses, and then look at how we can actually manage those gaps. So the key objective of any plan is to ensure that it actually improves advice from an advisor perspective and has good client outcomes. It's also about making sure that the business improves their processes and also builds value in that business. So there's a lot of work still to be done in this particular area, and as things become clear, we'll be able to manage that through and also understand around what potential compliance costs are going to be going forward.
Yeah, that's going to be significant, we believe. But so how are you gearing up to cope with all the challenges that advisors are going to be faced with?
At our recent roadshows, we introduced the Professional Development Program, which is, again, about supporting advisors build better businesses as well as supporting them through regulatory change. We recently did a survey where 53% of advisors responded that they had no formal qualifications, and 65% of advisors were actually going to license in their own right. So there's a big job for us as an industry to ensure that advisors are ready and that we bring as many people through that are going to be ready for regulation. We've developed a professional development program which we've been working hard on, and we'll be rolling that out in the coming months.
Yeah, that's awesome. The statistics about the feedback that you've just given us are very, very similar to the numbers that we've sourced ourselves to. But when you're starting to think that there is 4,000 to 5,000 independent advisors in the marketplace, and 60% of those are starting to think that they're going to go out and get licenses, I hate to say words like delusional, but I think there's a lot of people out there that don't really know and fully understand what's going to be needed for licensing. You know, the actual application process to get a license and pay your $5,500 or whatever it's going to cost is fantastic. That's easy, but it's then the ongoing compliance and the cost. And we believe, you know, that some of those costs are going to drive advisors to look for support and help from other entities, and that's why we're going down the track we are in the space of licensing, because there are some huge economies of scales to be had, and it's fantastic to see what you guys are doing in that personal development space to get a lot of advisors. Would you say 56% of them wanting to needing to take an education path to get them to where they need to be? So that's awesome. Thanks very much, Tricia. Really appreciate that. Righto, Adrian, back to you. So your distribution team's had a few new faces in it, and who's come on board and what's happening?
First and foremost, obviously, we have Tricia here, who's joined us to look after our professional development area, and this is an area that we really want to invest in. We really want to lead the market in terms of support for advisors, particularly through these challenging times. We also created a new head of group risk role, which we've appointed a gentleman by the name of Simon Millward into. We see huge opportunities in group risk, and our plan with group risk is to transform the offering from end to end. And Simon's the right man for us to bring on board to do that for us. So we're pretty excited about what we can do in that group risk area. So we've also appointed Dave Telford to the critical area of Otago Southland as our new BDM in that area. That area has historically been a really important market for us at Fidelity Life, and we want to maintain that and continue the good work that was undertaken by Carl Moran for many years in that neck of the woods. Finally, we've appointed a new analyst into the distribution team. Marianne Lauder joined our team from the claims area. And this is really a sign of the times for us in terms of getting a better handle on the data and analysis that sits within our distribution team and how we can operate more effectively going forward.
So Adrian, what's Fidelity's Life proposition, and what's your point of difference to advisors?
Okay, so I think the key thing here is our commitment to advisors as an industry and as a group. As you know, we were founded by an advisor for advisors, and that remains a cornerstone of who we are and how we like to operate. One of the things that we stressed throughout the roadshows was the fact that we have no intention of employing our own advisors. We see our role as supporting advisors in being as strong as they possibly can be, and in supporting the independent advice sector, because we see that as being critical to addressing the underinsurance issue for Kiwis. So that's a key part in terms of supporting the advisors. The second part really is around our concept of being Kiwi owned and operated and our financial strength. It's been well documented, of course, that the New Zealand Super Fund is now a cornerstone stakeholder in our organisation, which is tremendously exciting for us, really ties in the piece about being Kiwi owned and operated, and also firms up our position as A- credit rating, and therefore we go forward in terms with some confidence in terms of our financial strength and our position in the market.
Oh, that's awesome. All the discussion and talk and articles in the press lately, FMA, soft dollars, trips incentives. What's Fidelity's approach to that, and how are you tackling that issue in the marketplace?
Well, it's fascinating times, isn't it? Look, I think that the interesting thing from our point of view is obviously the FMA report is the latest in a long chain of things that have been happening, and we've been watching as the market evolves and as expectations evolve. And so as an organisation, we've been considering how we need to evolve to reflect those changing times. And I think there's two key things that we've done in that space recently. First, towards the end of last year, we introduced our concept of 3 pillars. which is around ensuring that everything we do has an education component in it. Yep. So ensuring and supporting advisors in terms of their own education. The second thing is giving back, or philanthropy, and how we support the communities in which we operate, and working with advisors in doing that, which we think helps to raise the profile not only of the advisors but what we do as an industry as a whole. And the third part is around recognition. You know, it's still important that we celebrate success. It's an important part of the industry and who we are. So we not only want to recognise achievement, but we also want to recognise the needs of advisors and what they're telling us, so that we can respond to those sorts of things. And so the next component of that, which we launched at our national conference, is really an umbrella concept we've called Black by Fidelity Life. And that's a framework that will enable us to build our recognition programs and our professional development and things like that under that concept. And we will evolve that with advisors and with the community as we get this further feedback about what's happening and what expectations are and what our needs are evolving.
Adrian, finally, what can advisors expect from Fidelity Life in the next 12 months?
It's exciting times, Jeff. I mean, as Phil has already touched on, we're continuing to work in the product space, and advisor feedback will continue to be a really important component of what it is that we do in that area, and understanding where the priorities are, where the opportunities are, and you'll see more from us in that product space. Secondly, we'll continue to work on tools and technology support. These things are critical for how we all operate going forward. Yeah. Our goal is to create a frictionless process. We're trialling all of those wonderful gadgets like chatbots and live chat and all those sorts of things, and a number of little pilot programs we've got going within the organisation. And we're looking at how we can introduce those to really enhance the experience for advisors and their customers. And we'll continue to work on that. And finally, and certainly not last but not least, is the piece around the professional development, that we really do believe that over the next 12 months that is going to be critical. We want to be there to support advisors through a difficult time, but also ensure that we're building robust and sustainable businesses right the way across the board.
Fantastic, you guys. You've done an awesome job. The roadshows were brilliant, very, very well attended, and it was novel for me, or interesting for me, I suppose, when you talked about the business being founded by an advisor for an advisor. I was in the industry when Gordon was around, so it shows you how far back I go. So I think he would look at the changes that we're having coming up in the marketplace with a little bit of horror when you start talking about chatbots. When Gordon started that business, they didn't even have mobile phones. So, but well done, congratulations to you on what you're doing, and thanks for being with us today. Folks, the question that we'd like you to answer for today's session, to go into the draw for the Prezi card, is Adrian mentioned the 3 pillars that Fidelity Life have sort of built their mantra on. If you can come back to us and answer that question, you'll go into the draw for a $100 Prezi card. Thanks so much for being with us again today. We'll see you next month. Bye for now.